Welcome to Life Planning 101, brought to you by Kennedy Financial Services of Eastland. Tune in every Monday morning at 8:30 on KATX and KWBY, and again on Saturday morning at 9 on KATX and KWBY as Angela Robinson joins Terry Slavens to share important financial information to help you live life on purpose. Insurance, investments, estate and tax planning, and much more. All covered now on Life Planning 101.
And welcome into Life Planning 101 right here on KTX KWBY. Terry Slavens with you, along with Angela Kennedy Robinson, as always. Good morning, Angela.
Good morning. Good Monday morning. And we have got a show for you today. I tell you what, I've been excited. I've been like holding my tongue because I can't do taxes every single week. I know we have new tax reform, but I cannot talk about taxes every single week. Well, it's a new month. I can talk about taxes. So I'm actually excited. We've been able to do some really cool planning this year. It's been a lot of fun. I feel like a little kid in a candy store. You know, everybody always talks about the people that are loving this tax code are the CPAs, the accountants, because obviously it's going to create more work for them.
Right.
It created more work for us, obviously, but in a wonderful way, because we've been able to get people so excited about what they're able to do with their future and their planning, and it's fun. So I thought, okay, what can we do to really emphasize this on the radio show and share some of this with you? And I thought, you know what? We need to, as we go through the year, kind of share our best planning ideas that we've worked on throughout the year. So I thought this would be great because I tried to think, okay, I could focus just on business. I could focus just on estates. I could focus just on individuals because there's lots of reform around all three of those things.
Right.
But the truth is that, if we focus on one, someone might not listen, and then we end up losing the person that needs to hear it the most. And so I thought, no, we need to just stick to what is the best thing going on right now. And in addition to this, we've been, and you know this, we've been doing a ton of research. I have traveled a lot already this year, trying to gain as much education and information that I can on the tax code. I actually went and spent 2 days with the gentleman that the IRS calls when they don't even understand what they've written in regard to estate taxes. And, he was absolutely wonderful. And so what we've done is we've compiled all this information that we've taken, really drilled down to what are the dangers, what are the things people need to be planning, and then what opportunities are out there. And then we put together a presentation we're going to be doing over the next 2 weeks. We have one this Thursday night in Abilene, and then one next Thursday night in Fort Worth. So if you're a listener, you want to come, make sure you call into our office. It'll be free to you to come as a listener to the radio show. Just bring up Life Planning 101. But our phone number there is 254-629-3863. Or you can call us on our 800 number if you, for some reason, don't have a cell phone in today's age. That's 800-588-6381. But 254-629-3863. And you can, of course, visit us on our website.
And what's the times of those? Kennedy-financial.com.
Good question. So there's two different times. The one in Abilene starts at 6 p.m., and the one in Fort Worth is at 6:30. So They're both going to be great. You need to RSVP, though, because we end up having a buffet. This is something we do monthly for our clients anyway. We always bring in information. We just thought we'd open this up to our listeners because it's such a special topic.
Absolutely.
So please RSVP because we won't have enough food if you do not. So make sure you do that. But it's going to be really, really great information, like I mentioned, compiled from all kinds of sources, the best of the best, and we're really excited to share. So let's get into some stuff. If you know anything about me, I have a little bit of a passion for the arts, and I like music, and I like song and dance and musicals and this and that. And so a couple years ago, I was asked by Mr. David Bailey here in Eastland, Texas, to sing in the choir. Well, that was the hardest thing I've ever done in my life. So sing alto. I don't know how to sing anything but melody. Well, let me tell you, I really appreciate that. Well, he said, he asked, and I said, well, I'm only special music because I can't do this all the time because literally, and I'm a perfectionist, obviously,
Right.
So I want to do my best. And so I can't do it on a weekly basis. So he asked that I be part of the Easter cantata, and I thought, okay, well, I can do that. So between that and the tax code, I don't know which one's harder to understand or comprehend or learn about. So I'm a little tossed. But I thought this was interesting. I was looking up some fun facts for our dinners. And did you know cowboy boots in the state of Texas, in a lot of places, you don't have to pay sales tax on them?
Really?
It's in the law. State of Texas, cowboy boots. Now, work boots, you always pay sales tax on.
Right.
But cowboy boots, get you some of that.
Huh.
Yeah, it's interesting. So if you can explain why they do the things they do in the tax code, please help me.
Come join us.
Yes, help me, because, I mean, just like that. Why do they do that? I don't have a clue. Of course, we are Texas. There's always that. But, the biggest thing about this tax code is whether you're just an individual paying income taxes, you have a business with complex tax issues, obviously, and or you just want to protect your estate and your legacy from Uncle Sam. I cannot emphasize to you enough that now is the time to do it. We have this window. A lot of people don't realize that tax reform, for the most part, sunsets.
Right.
And that's if we don't change regimes in the meantime, right? Because
that's assuming that Trump gets reelected.
That's right. Assuming
that's
that the Congress keeps the Republican,
right.
majority, which the Democrats have already released their revisions of what they will do if they gain majority in the Congress regarding the tax code. So, and I don't care what side of the aisle you sit on. This is not to be political. You need to think about your situation. And if you are willing to just say, okay, well, I'm a Democrat, so I'm not going to do anything because I don't agree with what they did, you have free money in your pocket right now that you really need to second guess that comment, okay? Because we can be so stubborn to the fact that we actually hurt ourselves.
Yeah, I'm a Democrat. My granddad was a Democrat, and it's almost like a family tradition when it comes to politics.
That's exactly right.
Instead of looking at how things have changed from the Democrat of the 60s
exactly
to the Democrat of today's, or the Republicans. I'm not picking on any one party.
Either one. But in today's environment, obviously, my comment isn't aimed at a Democrat or an independent, because you may not have agreed with
right.
what they did with the tax code. But don't let that hurt your family. Don't let that close that window for you to be able to look at these opportunities. So, I cannot stress enough how awesome this opportunity is and how much we've been able to see. And we're going to share 3 stories with you today that emphasize this, that you are not going to want to miss. I promise you.
We'll continue right after this on KTX KWBY. Good stuff here on Life Planning 101. It's tax reform, and Angela has read the entire code.
Yes, the reform. Not the entire code.
Not the entire code. The entire reform, which was how many pages?
Oh my gosh, I can't even
pages
remember. It was more than that, yes. It was a lot. And of course, you can read it, but you can get lost in it. And so I have spent countless hours on different webinars, reading different articles from some of the best sources out there, like the Tax Institute or the AICPA, or spending time with Mr. Michael Amoya, which is a tax law guy that everybody calls from the IRS when they have a question. So we've spent a lot of time studying this. And the truth is there's a windfall with tax reform if you're willing to look at it and plan for it. And the first story I want to share with you is probably my favorite, okay? As I mentioned before the break, I'm going to share with you 3 different things that we've planned for already this year. So these are real life stories. And don't forget, over the next 2 Thursdays, we're going to actually have a tax reform seminar, one in Abilene and one in Fort Worth. So reach out to us, kennedy-financial.com, and you have to RSVP to come. So
and the one in Abilene is this Thursday?
This Thursday, that's right.
Okay, so that'd be the 14th.
15th.
15th, yes, 15th.
Keep going.
Yeah,
Keep
15th.
going, 15th.
And then the 22nd.
Yes, that's
down
right.
In Fort Worth.
That's right. So these are going to be great. You don't want to miss them. But, the first one I want to share with you, and I've said this on the radio show before, that, there's a saying that you die twice, right? The first time is when you actually pass. And the second time is when your memory is lost.
Right.
No one remembers you. Isn't that sad?
Yeah.
Actually think about that. Yeah. Well, this won't be the case for this lady. that came in our office, and she was introduced to us through one of our clients that have been working with us for years, and I was so excited to start working with her. She's been on several missions in her life, and she has such a passion for what she's done and what she's seen, and third world countries and her church and the ministry that they've been able to provide, and she just carries on and on and on about this. Well, she has no children. She's never been married. And so, her biggest deal is, well, I've built all this wealth because she's been successful. I've built all this wealth, and, I've got an IRA that's very large. I'm going to turn 70, and I'm going to have to start taking required minimum distributions out of that IRA that I'm not going to need, and I'm going to pay tax on those. I want to make sure that my wealth doesn't just get dwindled away by my nieces and nephews. I want to make sure that it, is used for something that I would want to use it for. And should I just spend it all in my lifetime? And she says, I can't even do that because here I am retired and I'm still saving $600 a month, which, it's like her pension and everything else. She just got more than she needs.
Right.
And so, she goes on and on about this. And then she goes back to talking about how much she loves their church and how much she loves the ministry that they do. And so we put all the stuff together. We actually did a fact find and looked at all the analysis, and we came back to her and we said, okay, what if you could create a foundation that your nieces and nephews could run, that they could get to know your passions and share in that and make sure something gets carried on past your lifetime? What if that could last for the next 100 years or more?
Wow.
And continue to fund missions for your church for the next 100 years or more. And by the way, this tax problem you have with your IRA, we're going to reduce that in the meantime. And you've got all this appreciated stock that you need to reposition because it needs to be repositioned. You need to sell some of it and reallocate your portfolio, but you can't do it because it'd kill you tax-wise.
Right.
We're going to take care of that problem too.
So a win-win situation.
So it was a win-win situation all the way around. Immediately, we were able to increase her estate, her legacy, by 50% overnight. Okay? We have an awesome little software that we use, and you're able to plug in these numbers, and you're able to look at each year from now when she's 62 years old through 85, 95, age 100, and see what it is. There isn't a single year where she doesn't have a bigger legacy than she does today. There isn't a single year that she doesn't pay more taxes than she does today. And moreover, her heirs are going to receive just as much money with less tax.
Wow.
Because you got to remember, if they inherit an IRA, they have to pay tax on that IRA too. So we used a Roth conversion. Okay, so take an IRA, take it to a Roth IRA, right? So you actually make that a tax-free instrument, as long as it's not taken out without penalty or anything else.
Right.
But it grows tax-free and it comes out tax-free. It's the last time that money's ever taxed. Isn't that cool?
Very cool.
Yeah. So, that was probably, I like to say, I started with my favorite. Of course, I'm very passionate too about missions and, that type of thing. So we just hit it off really well. But, what was wonderful is that she just was just in awe. She was just in awe of the fact that she could do all of this because she'd never dreamt that she could do it. And by the way, that $600 a month, you know what we told her to do with it?
What's that?
Put it in her savings account and take her nieces and nephews on the next mission trip that she goes on. So she cultivates that passion in them today.
Sure.
So that when they get this, when they're able to see this foundation, they're able to run it. And by the way, a lot of people say, well, I have to have a lot of money to do a foundation. Actually, I had an accountant tell me about a year ago, he says, well, this guy can't do a foundation because you really need about $10 million for a foundation to be able to be worth anything. No, you don't. There are tools out there that you can do today, basically creating a mini foundation with very low admin cost. I mean, basically, you could set up a foundation if you wanted to for $5,000.
Wow.
Okay. Now, obviously, we are not going to propose that to people.
Sure.
But the fact is don't think that I have to have millions of dollars to accomplish this. She doesn't have that kind of wealth. Yes, she's been successful, but she doesn't have that kind of wealth.
Not 10 million.
That's right. That's right. So, what a wonderful thing to be able to leave a legacy, but not only leave a legacy, leave a less taxed legacy for your nieces and nephews at the same time. Carry on your passion for the next 100 years or more.
Good
Pretty
stuff.
amazing. She's
Yeah.
not going to die twice.
No.
I
she's
failed
gonna
to
live
say
on.
that. She's going to live on. That's right. When we come back, 2 more great stories you don't want to miss.
Final segment already of Life Planning 101. Angela, we have a lot to get to.
The tax reform windfall. Don't let it slip through your fingers, right?
That's right.
So we've got this show. If you miss anything, if you want to know more, the next 2 Thursdays, visit our website, www.kennedy-financial.com. We have tax seminars going on in Abilene and Fort Worth. So make sure you look, RSVP, because we won't let you in if you don't. So
And you won't eat anyway.
and you won't
so-
eat it. So yeah, you won't eat. That's exactly right. So, because again, these are for our clients
Right.
typically. So we just want to open it up to our listeners. So will taxes kill your retirement plan? I think we've talked about tax economics on the show before. If you have a pen and paper, if you're driving, do not do this. But if you have a pen and paper, you can write this down. And I want to touch on this real quick because I really want to hit the last one. But, rate, the tax rate, times the number of people that pay taxes equals revenue neutral. That's how the Treasury figures out how much they need to raise
Right.
to get to revenue neutral, right? So I want you to think about our population today. What's that generation that has all the people we always talk
Baby
about?
boomers?
Yeah, that one, right? Okay, well, how old are these baby boomers? Are they early working years or nearing retirement?
Nearing retirement, already in retirement.
That's right. So what happens when we lose that generation? The number of taxpayers is going to
Go down.
So what does the rate have to do?
Go up.
It has to do that, right? It absolutely has to do it. Well, I've got bad news for you, baby boomers. They aren't going to work that way. You're going to pay just as much taxes, if not more taxes in retirement if you don't plan for otherwise.
Right.
And we watch this happen. We've already seen it happen. People defer as much as they can into their 401ks and retirement plans because they want to be as taxed as little as they can today. And over the last several years, that's been a good plan because when you're taxed at 43%, you want to get that number down, right? But now we're going to take that number down to 35% or 37% or whatever that is, and you've got that 5% to deal with. And what we're saying is get some tax diversification in your plan. I dealt with this story last week. We actually had a gentleman called in. They needed money. Well, all they have is this massive IRA to pull money out of. And they said, well, and we need to withhold money from that IRA. And we want to withhold about 25%. So I want you to think about this. If I take 25% out of my IRA to pay the IRS, I'm actually going to pay taxes on that 25%. So let's assume that I take $10,000 out of my IRA. That's $2,500 in taxes that I'm going to send the IRS. But then I'm going to owe another 25% on the $2,500
Right.
that I send to the IRS, right? And it's probably going to make more of your Social Security taxable too. Woo, that's rough, isn't it?
That's like a triple-edged sword.
That is a triple-edged sword, and it happens all the time. I cannot stress to you the importance, this crucial little window of time that we have for you to be able to do some tax diversification. We built one income plan where we've got a gentleman that we were able to take from this type of situation to be able to balancing of about 50% taxable, 50% tax-free in retirement, not even just non-qualified gains and losses. So really, really important that you focus on that, okay? And the third one, man, I'm running out of time. This is really, really good. Choose your tax bill. If you're a business owner, that's what you get to do this year. Choose your tax bill. Isn't that cool? Okay,
Cool.
so this is a no-brainer for a doctor. We all know about this 20% deduction that pass-through entities supposedly get. Well, be cautious with that. Not everybody gets it. There's lots of rules and regulations around that. We're going to talk about that at the next seminars. We've got actually built a flow chart just to show, because this thing's so complicated. I'm telling you, it's worse than choir. Okay, so this is a no-brainer for a doctor that was visiting us. He is making $750,000 a year. Here's his options. He can either pay $179,169 in taxes this year, or $37,710 in income taxes. Wow. Isn't that amazing? $130,000 difference. And Moreover, from a picture of last year, just by the tax rate change, if he gets himself down to that $37,000, he's actually saved himself about 20% from what it would have been comparable to last year. So his cash is plush by doing this. Isn't that cool?
That is so cool.
It is so cool, right? So if business owners, I don't care who you are, if you're in the service business, which is health, law, accounting, actuarial science, performing arts, consulting, athletics, financial services, brokerage services, or any other trade or business where the principal asset of the business is your reputation or your skill, excluding architects and engineers, but everybody else that's a service business, you have the choice of what your tax bill is going to be this year. But don't wait, because that window will close and you cannot do this at the end of the year. You've got to do it now. You've got to plan today. You know, someone said recently, we always say we struggle. Everybody asks what I do. I was like, I don't know how to answer that. How do I answer that? And someone said, I know what you do. You do pre-tax planning, not after-tax planning.
Right.
My CPA does after-tax planning. You do pre-tax planning. And I said, that's a great way to put that. That's exactly what we focus on. So what we want to know from you this week, answer us on Twitter at KFS Life Planning. Have you started planning with Uncle Sam's dollars this year? And if not,
why not?
Why not? That's exactly right. Good one, Terry. With that, make sure that you check out our seminars. They're going to be great. We're really excited to be able to share a lot of these strategies and opportunities with people, so you don't want to miss those over the next 2 Thursdays. My name is Angela Robinson with Kennedy Financial Services here in the great town of Eastland, Texas. God bless everyone, and have a great week.
Thank you for joining us for Life Planning 101, brought to you by Kennedy Financial Services of Eastland. Tune in every Monday morning at 8:30 on KATX and KWBY, and again on Saturday morning at 9 o'clock on KATX and KWBY for more Life Planning 101.
Advisory services offered through Smart Money Group, LLC, a registered investment advisor. Securities offered through Calton & Associates Incorporated, member FINRA SIPC. Kennedy Financial Services Incorporated is an independent of Calton & Associates Incorporated and Smart Money Group, LLC.